I mean, monetary policy around the world is unhinged. It's completely subject to different human theories about how monetary policy should work. You've got the monetarist school, the Keynesian school, the Austrian / supply side school. But then you have on the other side of it, it's not just monetary policy. It is politics that influences monetary policy around the world. So it's not independent around the world, maybe a little more so in the United States than in other places. But I just think pure politics is much more of an influence than many people appreciate.
Europe has made significant headway in addressing inflation, with central banks decisively raising interest rates and committing to keeping them high for an extended period. Inflation has notably declined from the double-digit highs of the previous year. However, the challenge remains in curbing underlying inflation, which has proven more resistant than headline inflation that includes volatile elements like energy and food. It is imperative to bring this underlying inflation back to the target level to ensure sustainable economic stability. Prolonged high inflation can lead to distortions in the economy and result in extended high real interest rates, which can deter both private and public investments, thus hampering future growth prospects. Cathie Wood's detailed analysis, as discussed in the video below, draws comparisons to past economic situations, particularly in the 1960s and 1970s. She also sheds light on the impact of political influences on monetary policy. In light of these economic challenges, Wood emphasizes Bitcoin as a secure choice for individuals seeking to safeguard their financial well-being. Her insights offer valuable perspectives on the current economic landscape and the role of digital assets like Bitcoin in uncertain times.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
If you look back to what happened in the 70s, and many people fear that we are in a period like the 70s now, especially hearing all of these wage negotiations and settlements, 10% per year, that feels very 70s. I personally do not think we're in the 70s, but just to help people understand what can happen when you basically unhinge monetary policy, close the gold exchange standard. The lack of discipline started in the 60s, actually. Vietnam War and Great Society, so guns and butter. The government could pay for everything. Sound familiar? Sound familiar, right? And what happened back then is over 15 years, the Fed accommodated profligate government spending. So it just started with Vietnam and Great Society, and it only got worse. So that was a 15-year plus period by the time Volcker got in, and he had to crack the whip, namely starve the economy of money relative to what it had been used to. We ended up with double-digit inflation. And I remember with surtaxes, businesses had to pay in interest more than 20%. That was just a killer. Inflation was absolutely destroying purchasing power. So, and I remember my father back then. I remember my dear father back then, talking to me about it and talking to my mother especially, and I would overhear these conversations. My paycheck, we can't buy as much food. This is terrible. So why is it not the same thing now? Because we have profligate spending in the U.S. and the debt levels are just incredible. Part of the reason is I think monetary policy is making a different mistake. So M2 growth is negative on a year-over-year basis, and that means the Fed is not accommodating this government spending. But what it also means is the government spending is going to crowd out the private sector. And I think you're beginning to see that happen now. We think there's going to be a harder landing. We learned a very important lesson. We had regional banks, stocks plummeting, some of them going bankrupt. And Bitcoin rose from 19,000 to 30,000. What did that tell us? it tells us that because of the decentralization and the transparency in the network, that counterparty risk is not an issue for Bitcoin. And so there was a flight to safety into Bitcoin. Think about that. As bank stocks were plummeting, that spoke very loudly to me. And I think the other reason people have been reticent is they heard about FTX. And if they think about FTX, though, FTX proved the point that you really want to be involved with a Bitcoin network and not something like an FTX. Why? Bitcoin is transparent and decentralized. FTX was completely centralized, completely opaque, and a fraud. Sam Bankman-Fried did not like Bitcoin. Right. I understand why. He thought he was a master of the universe and could control everything. Well, he couldn't control Bitcoin. And that's its beauty. That's its beauty.
The Securities and Exchange Commission faced a setback in August when a court rejected Grayscale's application to transform its Bitcoin trust into an ETF. Notably, the SEC has chosen not to appeal this court decision, as reported by an insider on Friday. This decision increases the likelihood that the Grayscale Bitcoin Trust could be converted into a more investor-friendly ETF, which has resulted in a positive reaction in the Bitcoin market, driving its price higher. In August, the D.C. Circuit Court of Appeals had ruled that the SEC's rejection of Grayscale Investments' ETF conversion application was unjust and arbitrary, and demanded a review of this decision. The court argued that federal agencies must treat similar cases consistently. While the SEC recently approved the trading of 2 Bitcoin futures funds on national exchanges, it denied approval for Grayscale's Bitcoin fund. The decision not to appeal leaves questions about the SEC's next steps regarding Grayscale's application, as they still have the authority to reject it for other reasons not addressed by the court's decision. Grayscale, in turn, could potentially challenge any new rejections in court. GBTC, the world's largest cryptocurrency fund, has traded at a discount to its Bitcoin holdings since February 2021, with that discount reaching almost 50% at one point, but later receding to around 17%. Grayscale has advocated for converting GBTC into an ETF to eliminate this discount by aligning the price with the underlying Bitcoin value. The ETF structure allows for a creation and redemption model, facilitating the management of supply and demand. This development has raised questions about the SEC's approach and its impact on the evolving landscape of digital assets. Share your thoughts in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.